How are you supposed to know which news is going to drive the market? That's a question we've been trying to answer all year. We've had tariffs, we've had wars in the Ukraine, now we've got Israel bombing Iran, we have global economic weakness, we have the big beautiful bill, we have an FOMC statement coming up this Wednesday. How the heck can you make sense of all this? I'm going to talk about it a little bit in this video. We're going to take a look at my last two trades, and I'm going to tell you how I'm approaching this market right now. By the way, for those of you who are celebrating Father's Day, happy Father's Day. So on Friday, I showed you Microsoft, and that was before the open. We had news overnight that Israel had bombed Iran. I'd mentioned to you that wars tend not to have a lasting market impact, and Microsoft has been a very strong stock that's been grinding higher. I felt that on that initial pullback on Friday, any kind of market bounce should provide us with an opportunity to get long Microsoft. It's been strong, didn't happen. Stock never really got off the deck. I wouldn't have traded it. I didn't trade it. You can see how it pulled back initially when the market pulled back. Let's take a look at Friday's price action. So Friday we get this initial dip and then we get this nice bounce, and you can see that Microsoft really never got off the deck when the market was starting to bounce. So weak price action, no reason to get long Microsoft. That was a dud. Qualcomm, I gave you that one on Wednesday, and that stock was trying to break through the 200-day moving average and it never got through it. So take a look at that on a daily chart, and you can see how it's trying to get through that 200-day moving average. I like this price action Wednesday before the open. Nice long green candle here. We were watching for that breakout and follow through. Never got it. In fact, we had a doji on Wednesday and then a rejection on Thursday with follow through on Friday, closing above the 100-day moving average. The trade never set up. Everything else looked good to that point, but no follow through. And that's what we're seeing in the market right now. There's no real market momentum. So for a directional trader, this is a time to really lay low. What do we got coming up this week? Really a funky week as I look at it, because we've got the FOMC statement on Wednesday. Typically what you're going to see is Monday you might get some activity, especially if there's news over the weekend, but we're watching the futures right now, and I think the futures S&P is down about 3 points. Nothing. So if we have a very quiet day Monday to start the day, it's probably going to continue to be quiet. Same thing for Tuesday. Traders aren't going to take a lot of big positions ahead of the FOMC statement. What can we expect out of the Fed on Wednesday? Well, they've been pretty clear that they're watching both mandates. They're keeping their avenues open, and no rate cut is expected. So Powell's even said he's not expecting a rate cut this year, but the market's pricing one in July, possibly, but more likely September. So I don't think the Fed's going to have a whole lot to say. There's not going to be any real change on Wednesday. And we've got inflation improving slightly with the CPI and the PPI last week. So that's good news. And then we started to see that jobs were starting to soften. In fact, we saw initial jobless claims at 248,000 last Thursday. That's a pretty high number. So ideally, the Fed starts to soften its tone a little bit. Inflation has been coming in, and we've got the labor market starting to soften a little bit. We'll see. But I'm not expecting any big earth-shattering news on Wednesday. And typically, we're going to get an FOMC reaction on Wednesday, and Thursday, overnight, once there's been a chance to really reflect on what the Fed statement was, Thursday's usually when you get a really decent move. We also have triple witching on Friday. Well, you can almost guarantee that you're going to get one decent day of volatility out of that expiration week. Could be Monday, Tuesday, Wednesday, Thursday, could even be Friday, but typically it's going to be Monday, Tuesday, Wednesday. Those tend to be the most likely. Thursday's a holiday. It's Juneteenth. So now all of a sudden we get the FOMC statement on Wednesday. We get a holiday on Thursday. Possibly a lot of traders taking off for an extended weekend. And then we've got a trading session on Friday. So I am not expecting a whole lot to happen this week. I know that that comes as a disappointment to every trader. We want action. We want something that we can sink our teeth into, and it's just not there. One of the most important things that you can learn as a directional trader, okay, if you're a premium seller, there's always opportunities because you're always selling premium, okay? Different style of trading, different risks, different rewards. And you might think, well, hey, why don't I just shift to premium selling strategies right now? Well, if you're a premium seller, the option implied volatilities are extremely low. So that means you've got to go very, very close to the money to get a decent reward. The risk reward is just simply not there. This is a good time to do nothing. I've been day trading. I had a decent week last week day trading. That's all I feel comfortable doing right now. And even though I highlighted Qualcomm and Microsoft before the open on 2 days, this week, I didn't trade them. Nothing set up intraday. And the stocks that do set up, you don't know before the open what they're going to be. All of a sudden, you start seeing a nice breakout. You start seeing some volume come in. All right, this is a stock I feel comfortable day trading right now. And I'm trying to avoid big mistakes. I'm just trying to grind it out, just trying to make a little bit of money right now while the market is doing nothing. And that's kind of the zone that I'm in right now. I'm waiting for some market driving news. So, big beautiful bill, is it priced in? I don't know. Maybe it is. I think everybody's expecting that the big beautiful bill is going to get passed. Republicans have a few members that they need to convince. They'll sway them eventually, and the big beautiful bill will get passed. One of the key tells from last week was when we had a low CPI number. That should have been super bullish. And we also had news that there was a China trade deal. It doesn't get any better than that. What did the market do? It pulled back. And we'll take a look at that. And you can see this is the price action on Wednesday. Low CPI number, China trade deal. Yay! Market tries to rally early and then pulls back all day. This should have been a really good moment for bulls to shine. Didn't happen. Markets pulled back from that level. Yes, the Israel-Iran news is weighing on the market a little bit, but again, wars don't tend to have a lasting market impact. So trade deals, we haven't seen any trade deals. I've heard Scott Bessent say that as long as the trade deals are progressing in the right direction, that the July 9th deadline is probably going to get rolled back. So I'm not seeing that big catalyst there either. And if you've watched my previous videos, you know that I'm very concerned about global economic weakness. It's coming to the US. It's just a matter of time. Central banks around the world have been cutting rates at a very fast pace. They're not remotely worried about inflation. They are worried about economic growth. So for me personally, it's just a waiting game. I just want to watch this wimpy little rally, tiny bodied candles. I want to see this start to hit resistance, and we're close. We're within striking distance of the all-time high. So am I out there aggressively shorting and buying puts right now? No. I need to see that technical breakdown, and I want to see it come fast, and I want to see us blow through these two major moving averages, the 100-day and the 200-day moving average. When's that going to happen? All I know is that if you get the big, beautiful bill passed and the market doesn't make a new all-time high, if you get some trade deals passed and the market doesn't make a new all-time high, that it's probably not going to happen, and that undertow that we're seeing from global economic slowing is going to finally come home to roost. You're going to start to see corporations lower their earnings estimates into earnings season, and you're going to start seeing greater unemployment. Then that has a chance to finally weigh on the market. So one thing that happened for me this year personally was I felt that the global economic news was part of this move right here. As it turns out, it really wasn't. This was all just fear on Trump's statements about tariffs and how high they were going to be. Market panicked, and then it bounced as soon as he said, no, we're going to give a 90-day reprieve on the tariffs. That's what the market did afterwards. So this is all tariff generated. And now we're finally getting to the point to where I think we're going to start seeing some economic weakness. So by mid-July, third week in July, we've got earnings season unfolding. I think they're going to start to disappoint. I think there's going to be some real nervous jitters on the part of investors come August when the Fed is in recess, Congress is in recess. Very typical that August, September, October are fairly weak months. And with the Fed not cutting interest rates, I think that that's when we could start to finally see some selling. I've been bearish, so I'm going to be waiting for technical confirmation. I'm not going to be guessing that this is going to happen. I'm going to wait for technical confirmation and a breakdown very quickly with nice long red candles below this 575 level on SPY. That would be the confirmation that I need that, yes, now we're going to start to see sellers take control. Until then, I'm going to continue to focus on day trading from the long side. Given the recent news, I'll give you a long that should perform pretty well. RTX, if you get a market pullback, should be a decent stock. That's Raytheon. That is a defense contractor, and you can see how the stock has continued to grind higher and break out right here, especially Friday on that news. So again, you're not out there chasing this stock. You're not out buying it right out of the gate when the stock is trading higher. You're waiting for any kind of dip that you get over the course of the next 2 or 3 days. And this is going to be a decent long for you to take a look at. You've got to run your searches every day. You have to see which stocks are breaking below support on heavy volume. Those are going to be your day trading opportunities. Lulu, LULU, that's a nice looking short. Is it going to perform as a great short Monday if the market goes down? I don't know. It changes every day. How many times have you seen a stock that's super strong one day and then it gives everything back the next day? It's happening all the time right now because the market doesn't have any momentum. It's just back and forth. OKLO, that was a nice stock. I traded that this week. Did very well on it, and I still have a long position on it. And you can see how the stock has been moving higher. Beautiful breakout here, little pullback, new relative high. This support at $60 should hold. So I like the stock. I'm going to be watching what happens with it. Nice volume on it. This is the kind of thing that you have to do on a daily basis. Run your searches, take a look for strength, use alerts. For crying out loud, alerts are fantastic. If you see a super hot stock in the first half an hour, 45 minutes of the day, it's too hot to rush in and buy. So set an alert. When the stock goes from relative strength to relative weakness to relative strength, you can set that type of alert, and then you evaluate the dip. Was the dip brief and shallow? Yes, it was. So that tells you that buyers are still engaged, that this is a good entry point to get long this stock, especially if you've seen the market pull back and the stock preserves its relative strength. You know there are institutional buyers in there, and that'll give you an opportunity to day trade from the long side. So you can't set real aggressive targets right now because you shouldn't expect that the market is going to have sustained intraday runs. It's just not going to. It's going to run higher. It's going to exhaust itself. It's going to try the downside, and you're just going to see that type of chop all day long. So get in at those inflection points, set passive targets, get out, and try and make a little bit of money while we're waiting for technical confirmation. Either way, If I'm flat out wrong and the big beautiful bill is what drives us to a new all-time high and we get lots of trade deals signed and the market absolutely loves it, and we don't have any economic weakness domestically, we get a big breakout to a new all-time high, okay, I'm going to participate, but I'll primarily be doing that still from a day trading standpoint, finding stocks that are breaking out to a new high. I'm sorry I don't have any bigger news for you. I'm sorry I don't have any gangbuster picks for you right now, but the best advice that I can give you is to just keep your trading activity fairly low right now. Try and find a stock or two each day that you can really get behind, and then try and pick some 50-cent moves out of it, a dollar move out of it, and by all means, try and stay out of trouble. This is not a time to have 5, 6, 8 different day trading positions on at a time. Absolutely not. You can't manage them, and there simply aren't that many attractive opportunities. But if you can zero in on 1 or 2 stocks that are really moving nicely, then try and trade those a few times during the course of the day and see if you can make some money off of it. That's all I've got for you this week. I am going to try and get a couple of other videos out, and of course I'll try and do a video Wednesday morning. Actually, I'm not going to do a video Wednesday morning. I've already talked to Harry. Harry and I are going to do a live event, and we're going to do that before the FOMC statement on Wednesday. So please, on my website, make sure that you click that live event tab, sign up for it. We'll be doing it about 2 hours before the FOMC statement, and we'll conclude probably about 30 minutes before the actual FOMC statement. Thanks so much for watching. We will see you then.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.